Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. When we look at the landscape of building long-term wealth, transitioning that capital to the next generation remains one of the most vital responsibilities of a wealth builder. However, as a family's balance sheet grows from a single nest egg into a multi-generational empire, parents and grandparents encounter a critical operational bottleneck that can quietly dismantle their progress. That's the generational transfer tax and compliance. Too often, people treat interfamily gifting as an afterthought, a casual conversation, or a simple wire transfer to be dealt with only at tax season or when an IRS audit notice hits the mailbox. But a true leader understands that financial precision is the ultimate foundation of asset protection and wealth building. So today I'm going to break down the operational mechanics of the federal gift tax and specifically get into how to deal legally with how much you can leave your children. So, when it comes to transferring wealth, your family's wealth operations must deploy a structural financial plan. This wealth transfer lays out over three real pillars. The first one is maximizing the annual exclusion. Every single donor has a strict annual limit that they can give an individual recipient without triggering a tax return. For the current tax year, the federal annual exclusion sits at $19,000 per recipient. This means you and your spouse can split the gift and allowing for a clean transfer of $38,000 to each of your children every single year without touching your lifetime exemption.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
The second layer is direct institutional outflows. So, under the current tax codes, payments made from educational or made for educational tuition or medical care are entirely exempt from the gift tax. However, blending these funds into your children's personal bank account can create severe compliance issues. These transfers must be kept entirely separate and paid directly to the university or the medical provider to qualify for the unlimited tax-free status. And the third and final layer is tracking your lifetime exemption. Your financial ledger must track transactions at the individual asset level. So every equity transfer, real estate interest shift, or cash gift above the annual limit immediately triggers and adds to your lifetime exemption. So you must maintain a clean record of how much you're giving every year and track that against your lifetime exemption record so you don't erode it unexpectedly. So we know that establishing and maintaining a sophisticated multi-generational tax tracking and gifting system requires time, discipline, and specialized compliance expertise. Many growing families reach a point where managing these complex tax brackets like filing Form 709 and trust ledgers just becomes an overwhelming administrative burden. So stop treating this like a headache and visit us at kinglife.org. Consider becoming a King Life member where we can help you with these strategies and processes and procedures to make it work. I'm Nathan Weaver. Remember to lead with confidence, live with integrity.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.